Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. First up, I want to wish all our viewers a very, very happy Diwali to you, your loved ones, your workplace, and everyone around you. It's a time of festivity. So, from all of us here at CNBC TV 18, wishing you health, prosperity, wealth, and of course clarity in this new Samvat 2082. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning and happy Diwali.
Happy Diwali, Prashant. Happy Diwali, Nigel. I was away for the last couple of days, but I'm so glad I could be back in time to celebrate the festival with Team CNBC TV 18, because that's when you truly feel festive. And a big, happy Diwali, health, wealth, prosperity, peace of mind. Wishing all of that and more to our viewers as well. Good morning, Nigel.
Well, that's right. Good morning. Welcome back, Surabhi, and happy Diwali, guys, to both of you, your families as well, and all our viewers out there. And luckily, we've had a good rally getting into this Diwali season. So it feels like Diwali, not not the year we had, but the run-up actually has been pretty good.
Absolutely. Actually, it didn't feel like Diwali till about 3 weeks back.
True.
Yeah.
And then, the market started moving last 2 weeks or so, 2.5 weeks
really
or so.
Yeah.
So let's take it from there, right? As we
and
always
decent
do.
earnings, right? Decent earnings.
Yeah.
That huge deluge of FII outflows, that's reduced. We've got some positive days as well. Earnings are looking good. The index is climbing higher. Feeling good?
Feeling good. It's a feel-good day. So good to have you back.
Good to be back.
Tomorrow, of course, is Muhurat.
Yes.
So 1 hour in the afternoon, not evening
Not in the
like we
evening.
always do.
Yeah.
Prashant's got a plan tonight.
Actually, it's my wife's birthday today. So,
Okay.
A very, very happy
birthday to
birthday to ma'am. And there's something special happening this evening. A gift. Let's get to it.
Anyway, let's just take it from the top in terms of what you need to know as we begin this new trading session. New trading week, it's a holiday shortened one. Today, of course, we trade for the full session. Tomorrow is 1 hour Muhurat session. And then, of course, Wednesday is a market holiday, Thursday, Friday. So in that sense, and many people, of course, will be for Diwali, etc., out with families. So perhaps participation, etc., a little lower than usual. But that shouldn't deter the market per se, which has been on a tear, right? And I think the graphics will come up. Last 2 weeks is basically where all of this has happened. So the Nifty is up about 1,200 points in the last 2 weeks. That's about 5% move. The Bank Nifty is up 3,600 points. That's about 7%. And the mid-cap index is up about 5.5%. That's about 3,100 points. So just 2 weeks. Of course, these levels are from the lows 2 weeks back to the highs that we saw last week, which is pretty much where all these indices left off on Friday. That is last Friday. Now, not very much has changed over the weekend as we come back into this new week. Some of the broader core themes remain the same. Nasdaq, after all said and done, and by the way, last week, there were these credit concerns which were flying off here and there. 2 banks had reported hits to that they were hit by frauds. And for a moment there, it looked like we perhaps will have a repeat of what Silicon Valley Bank, that entire episode. But, Friday session, again, lots of regional bank shares closed higher. For the week, Nasdaq was up 2.5%. S&P ended higher. So that piece remains quite okay. Gold continues to make new highs, so about $30 off the all-time highs. $4,250 an ounce is where gold prices finally sort of ended. And so, these are themes. These are essentially debates which continue. It's not one way or the other. It's not the debate is around whether the gold has done too much, and that continues as we come into this week. The debate is whether this AI is especially the amount of capital which is going into AI stocks is a bubble. That continues as we come back into this week. But there's no real perceptible change in the direction of travel as far as some of these themes are concerned. Now, just in terms of news flow over the weekend, I'm not sure what to really make of it from an implication point of view, but mass demonstrations over the weekend. They're called No Kings protests held across the U.S. against the Trump administration. And of course, President Trump responding in a style that I guess only he could on Twitter, social media, etc. So lots of stuff around that, lots of coverage around that, really. Treasury Secretary Scott Bessent to meet Chinese officials, this week in a run-up to the president's meeting, which is supposed to be in early November. So there seems to be a little bit of a thaw. President Trump indicating that additional 100% tariffs on China perhaps are not sustainable in that sense. And just to sort of circle in the two sectors here, large cap IT, which has been such a large underperformer. Week before last was great for IT. Last week, once again, there was a bit of a drift off. But just look at the top 6 large cap IT companies which have reported earnings, and they're all largely in line or slightly ahead of expectations. But the bigger one, of course, is financials, right? I mean, the financials, the bank Nifty has been doing very well. Both on the fiscal and monetary side, it was all starting to build up. And of course, add and throw into to that entire mix the point that valuation seems to be a little comfortable. And I think you've got a kind of a good mix here. So banks, perhaps one area where there always has been consensus optimism, but I guess it didn't perform for a while. But I think it's coming back. And we'll talk more about this as we go on. I'll just tie in the levels here, and then we'll look at the F&O stuff. So Nifty's taken on most important resistance levels. So all-time high is 26,277, but before that, perhaps a stop at the psychological level of 26,000. So keep an eye. The trailing stop is basically the 40-hourly exponential average, which is 25,412, which has, of course, been dragged higher along with the market. Nifty Bank has made a new all-time high. It's taken out the prior high of 57,628. So you're basically in uncharted territory, and support here at 56,970, which is the 40-hourly for the Nifty Bank as well. GIFT Nifty will give you a quick sense of how we are starting, and then we'll, of course, look at the broader F&O setup. A lot of short covering, not a lot actually, but a fair bit of short covering, which, of course, has led to this massive move that we've seen, 5-7%, depending on what index you look at. Over the last 2 weeks or so. So it's a pretty good start. 1% higher, 220, 230 odd points higher is what the indicative open on the GIFT Nifty is looking like. So you're going to be closer to 26,000 if you go by the rate on your screens. But Nigel, the F&O stats, that short covering continues.
Well, that's right. And it seems the FIs actually have pivoted over the last few days, just going by the kind of action that we have seen. The FIs, they seem to be coming back. They're covering shorts. They're showing in the money as well. And today, the session is going to be quite interesting because I'll tell you what, we have the weekly expiry as well that will be playing out this time around on a Monday, because tomorrow, obviously, we do have the Motor trading session. But the FI flows, that's the one that I'm looking at. Last week, they gave you a bit of a heartbreak, and then they came back. So the last few trading sessions, the FI money has gradually started coming back. Remember, they have been underweight on the Indian markets if you compare to the MSCI Emerging Market Index, or you just look at the flows on the whole. So good to have them back. Hopefully, they celebrate Diwali with us and even into Christmas with regard to those flows. Moving to, the short covering bounce that we are talking about. It seems the bulls went ahead and they squeezed those shorts with a big hug. Because in Friday's trading session, just take a look at that. It was evident that there was a short covering bounce that was playing out. And the data points coming in from the FIs will perfectly tell you that. So the FI data point should come up for you on the screen. Just take a look at it. The short positioning down by close to around 50,000 contracts. And just take a look at the Nifty. Well, the Nifty has seen a good run in the last few trading sessions. So it's been a good move that you've seen on the Nifty itself. Moving to the October series. Now, we are making this point at the start of the series that the FIs, they are net short on the index. And at the start of the series, they were at 94%. Now, the short positioning has come down from around 94%. It's come down to around 83%. And we have got a good 1,000-point rally that we have seen. So that is the power of short covering on absolute display that we have seen. Moving to the options data, then the PCR, it had gone dancing away to around 1.45 odd. It's come back down. It's come down to around 1.21 or thereabouts. So that's a pretty okay level because the put writers, they are back into place. So we saw aggressive writing. The 25,500, 25,600, 25,650 and the 25,700 put. Good amount of open interest build up. And today, as I said, is going to be the weekly expiry. So these put writers, they are counting in on the lower levels holding out. So just for the day, I know we're going to have a gap up, but going by the options data, you have this 25,600 odd as a support level. And the bulls, they have their eye on fresh all-time highs. And I think just going by the momentum, going by the flows and the news flow as well that we have, even the results that are coming in there, we could be at these all-time highs sooner rather than later. So that's the call out there. Just a couple of words of caution are there. In Friday's trading session, the Nifty moved up. We had the VIX as well moving up. That normally doesn't happen. So just keep an eye out. Anyways, the VIX is at bombed out levels. And one more point is the headline index felt very good, but many portfolios didn't feel that good because the broader markets actually underperformed in Friday's trading session. Nifty went dancing away. The breadth of the market didn't really keep up. So you would actually like the mid and the small caps as well to participate, because that's what makes portfolios feel good. RBL Bank is the stock you're going to be looking at. The long-awaited deal has happened. The stock is in the FNO band, so that adds the element of excitement as well. Could be a big re-rating. Though the stock has run up, when it's moved into the FNO band, I'll tell you what, the shorts, they'll be fretting in today's trading session. So keep an eye out on this one.
Okay. All right, Nigel, thanks very much for that. RBL Bank, indeed, the big news over the weekend. And, of course, we'll tell you more about it and what it means and how this open offer is going to play out. Big, stake purchase coming in from Emirates NBD. But for the time being, just a quick glance across Asia. And many of the markets like Singapore actually are shut for Diwali holidays. The ones that are trading are seeing a fair bit of green. The Hong Kong Hang Seng, for instance, has managed about a 2% up move. There's a lot of data out of China this morning. GDP numbers for the third quarter, and it is a little subdued. Chinese GDP has fallen below the 5% growth handle, so there's a bit of a slowdown, particularly in the property sector. For 9 months, the property investment part of the GDP, it's slumping almost 14%. So watch out for some of these cues.